Friends, the market is acting really strange. One moment we're flying up, the next we're crashing down within hours. Ethereum was printing new all-time highs, and it feels like it's setting the pace for the whole market right now. But the logical question is, what about the smaller coins? Are there any that can actually show strength in this cycle? Today, we'll dive into one such coin that's been in the spotlight for a long time, but still sparks debates: Hedera. Friends, before we get into the market review and promising coins, please note this video is not financial advice. It only reflects my personal impressions and market outlook. Always do your own research and invest wisely. I've covered Hedera many times on this channel. We've seen it all: deep dips and vertical rebounds. But missing what's happening with this asset right now is impossible. Especially for the new viewers, here's the concentrated version of the most important points so you have the full picture of this coin. Hedera is not a classic blockchain. It's a hash graph, DAG, network with ABFT consensus built on gossip about gossip and virtual voting. The practical result: high throughput, second finality, and consistently low fees. In other words, infrastructure for real business cases, not just speculation. 3 core building blocks of the network: token service, native tokenization without extra overhead; consensus service, event transaction ordering for RWA, auditing, supply chains; smart contract service, EVM compatible, Ethereum smart contracts without painful migration. HBAR is the fuel and security of the network. It pays for fees and powers staking, JOS delegation. Governance model: Hedera Council, global companies running the nodes. The upside: predictability and corporate integrations. The downside: constant debates about decentralization. We'll get to the critics and strengths in the next block. That's the hot part. Where is it used today? Payments, RWA/DeFi, supply chain, ESG reporting, identity. That's exactly why institutions are interested. They need speed, finality, and predictable fees. Why am I talking about this again? Because the setup has changed. The RWA wave, the move toward auditable AI/automation, and new pilots with banks and corporates, all of this creates a completely different foundation for HBAR compared to a year ago. Next, we'll break down the critical questions and updates that may shape its future trajectory. And, to avoid missing urgent updates, charts, and quick notes, make sure you subscribe to my Telegram, where I post everything first. Friends, let's be honest. Hedera has always been a coin with two faces. On one side, big partners, serious tech, and real use cases. On the other, constant criticism, questions about decentralization, and a feeling the market doesn't always give it fair value. The first point skeptics raise is governance. Yes, Hedera has a council full of world-class brands, but that's often seen as a minus. All nodes are run by the council, and the promised community node rollout has been delayed multiple times. It creates the impression of a corporate club rather than a truly decentralized blockchain. The second issue: the gap between news and on-chain metrics. The headlines sound impressive: banks, integrations, institutional use cases. But when you check TVL or wallet activity, it looks much smaller than competitors. That's why the market often sees Hedera's updates as PR without real traction. But dig deeper, and it gets interesting. Because the latest news shows Hedera is stepping onto the playing field that could be key in the next cycle. On August 14th, Kayo integrated BlackRock's institutional assets worth about $1.3 trillion through Hedera. Imagine, those assets can now be used in DeFi as collateral or yield-generating instruments. That's not just a headline, it's a fundamental move pulling serious capital into Hedera. And it's not the only signal. Grayscale registered a Hedera trust in Delaware. Yes, it's not an ETF yet, but it's a step toward institutional infrastructure that will open HBAR to new players. Add partnerships with Swarm and Aberdeen Group, now you're looking at tens of billions under management tied to tokenization on Hedera. And real transactions, they're happening already. In July, Lloyds, HBAR and Archax executed the UK's first institutional FX trade with tokenized collateral on Hedera. The Reserve Bank of Australia chose Hedera for Project Akasha, testing tokenized deposits, stablecoins, and even a pilot CBDC. These aren't testnet experiments. These are real deals in traditional finance. Another key vector, AI. Hedera didn't chase the hype of empty bot projects, but focused on transparent, auditable AI. They launched AI Studio, updated the agent kit, and partnered with Equity Lab. This means the network enables building verifiable AI agents, something most competitors lack. And here's Hedera's chance. Because when you're dealing with tokenizing billions or integrating AI into finance and logistics, you need not just speed, but trust, auditability, and low fees. Hedera already has all that. Friends, quick pause. Subscribe to the channel if you don't want to miss detailed research and analysis not only on one coin, but on the entire market. So what's next? If the team delivers progress on decentralization and boosts on-chain activity, HBAR could quickly change market sentiment. The fundamentals are there. BlackRock, Grayscale, banks, regulatory pilots, and AI trust layer, all building blocks are in place. So yes, Hedera might not have huge TVL yet, but they're focused on bringing big players into crypto, not just searching for liquidity within Web3. And now let's turn to market analysis and the current trends for this coin. Friends, let's be real. This is what everyone wants. What's next for HBAR price? News is one thing, but numbers on the chart speak louder. Right now, HBAR is trading in a very sensitive zone. After the local peak around 30 cents, the market hasn't allowed it to break higher. Every push toward that level gets sold off. Two scenarios. Either it's accumulation before a new breakout or just extended stagnation. The key zone now is $0.20 to $0.22. If Hedera holds above it, the structure stays bullish and it opens the door for another wave up. If it breaks down, we could revisit lower levels. If we take the bullish scenario for the broader market, and that's the current expectation heading into fall 2025, then Hedera looks positioned for upside, especially with BlackRock, real bank transactions, and Grayscale Trust in the picture. The setup is compelling. Some analysts suggest that if fundamentals continue and alt season arrives, Hedera could test higher levels in the $1.50 to $1.60 range. Well, that's it for today. Remember, this is just my personal view of the market, not financial advice. Always do your own research before investing. Thanks for watching. Don't forget to like, subscribe, and stay tuned for new coin breakdowns. See you soon.